Hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. Look, today is Wednesday, ladies and gentlemen, and this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. We're going to talk markets, what's happening out there, what to expect today, what are the latest news. So yes, about all this and a little bit more, as always, in the webinar right now, so stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, ladies and gentlemen, hello. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. Wednesday, the 3rd of December 2025. Still, well, we're in the final run, the final month of 2025, ladies and gentlemen. I hope, the month has been so far a great, well, actually not the month, sorry, the year has been a good one for you. A lot of things that were happening, has happened, still happening. I think up until the last trading day of the year, I think the market will have something to present itself, even I think during like Christmas and the holidays celebrations, and I think that the market will still present ourselves, present us something, something that will shock us a little bit or something like that. Honestly, like this year has been something like that. So, ladies and gentlemen, we're going to talk markets. Let's see what's happening in the world and in the financial sector. So before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. One thing that I'm going to do very quickly is put the usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Good morning, everyone. There we go. So yeah, I hope, like I said, I hope everybody's having a wonderful start of Wednesday. So just to let you know that there's not going to be a session on Friday. So yes, next week will be a full week of Markets Talk webinars. So but again, this week is a little bit of a shorter one for me. Now, look, also let's have a look at our website very quickly, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's quickly have a look at the economic calendar, because there is a bunch of data coming out this day. I mean, where to start? Well, actually, let's start from the beginning. First of all, I need to refresh the calendar, because again, I'm seeing that the calendar has stalled a little bit. So there we go. So we already kicked off Asia with a bunch of economic data sets. So look, from Australia, we got the S&P Global and Global Composite and Services PMIs, the final ones. Let's see. So the services did improve a little bit, so that's great. What else? API crude oil stock change, why it came out like this? I mean, okay, it's interesting why it's sitting here, but maybe. So going further, GDP, capital expenditure, GDP growth rate from Australia. So plus 0.4 against the previous plus 0.7. So a little bit of a disappointment here on a Q-on-Q side, but on the year-on-year side, it is okay. Again, not meeting the forecast, but still higher than the previous. Japan, composite and services, S&P Global, yep, PMIs, coming out higher. So that is great. A little bit, I would say, a rating dog. China numbers. A little bit on the lower side, but still manageable, because we're still in expansion territory. Okay, so let's go further here. Switzerland inflation rate 0%. Okay, 0%. It dropped to 0. Look, I think that they need to do more cutting, but the problem is, well, the more cutting of the rates, maybe this could help boost the a little bit of inflation here. You see, the problem is okay, but the problem with the with Switzerland, where let me remind myself as well. There, I think it's at zero. Where's that 0% interest rate? I mean, they would have to drop it into negative. It's already zero. The official, central bank, Swiss National Bank rate. It's already sitting at zero, and where to drop it again into negative territory. Let me just double check something here. What's the history here? Look, we were in the negative zone back in last time. We were back in 2022. Let me just check if I can find the Switzerland interest rate. Okay, so SNB. Okay, CHIR. Let's see if this is okay. Interest rate. Oh, it's stocks. It's sitting at stocks. Oh my God, honestly, like this is the little rookie mistake all the time that you do. Switzerland. I want to open up the chart. Switzerland interest. There we go. CHINTR. There we go. I need to keep remembering the ticker. Look, this is what I wanted to show you basically. But because look, inflation rate from Switzerland 0, right? On a month-on-month basis, in the negative territory. Still an improvement from previous, but nevertheless in a negative territory. So look, we were below 0 back in May. Back in May of 2022. I mean, really not not long ago in a way, but we were in. It was before that we were at 0 for quite a long time. Then basically in 2014 December, they decided to drop their interest rate to kind of to -2, what was that, minus 0.25, and then from there it went to minus 0.75. Look, it was a prolonged period of time from 2015 all the way to 2022. I mean, for 7 years, ladies and gentlemen, the bank kept its interest rates below 0, and in a way that kind of helped. But now the question is, are they going to do the same again? Well, something tells me that they are going to keep the rate unchanged for as long as they can, because just judging by the previous activity. So certainly the fact that inflation is kind of dropping a little bit, that shows the weakness in growth, because we know that we need a little bit of inflation in order to show growth, some sort of growth. But yeah, it's not there. At least it seems like that. Now, of course, we'll see how the real picture looks on the ground. When you go to a supermarket, probably some people might say that actually it kind of got more expensive, and I mean you cannot really doubt that, right? But the fact that the official inflation here sits at 0, that's okay. Look, I mean, in a way, it's on one hand it's worrying for the Swiss economy. They will have to think of different measures. At the moment, we know that they are trying to make some deals with the U.S. I mean, how are they gonna, if they're gonna succeed in all that? We'll see. But they're not on the the best terms or anything, but I think they're working on things. Anyway, ladies and gentlemen, for now, yes, I mean, well, I'll pick up on the Swiss franc in a bit, certainly when I'm going to jump into Forex, but it is an interesting economy that we are keeping a close eye on. Let's jump into Germany and the Eurozone, and then UK, basically because everybody's reporting composite and services PMIs. We'll keep an eye on that. Also from the Eurozone, we're going to get the Eurozone PPI figure, the year-on-year number, the month-on-month figure as well. So keep your eyes on that as well. Yeah. Going further, we are watching probably the main piece of economic data today, and that's going to be the ADP employment change. Now, this is the monthly one, not the weekly one that gets released right now, but this is the monthly one. And look, in what's interesting, at how everything quickly changes, right? Because we know that we cannot really trust the NFP right now. So NFP needs to do some, or should I say, the Bureau of Labor and Statistics needs to do some damage control, and I think that they need to kind of bring back the trust again, right? So that's why people are shifting towards other, sources like ADP, and for now, I think that this is going to be quite an important one, because lately the ADP number kind of has been showing somewhat of a real economy, in my opinion. Look, for like three times in this year, we saw the number coming out below zero, and well, that is a little bit worrying, I would say. So basically, there is a problem with job creation. Now, look, what can I say? For now, we're watching this very carefully, and we're going to keep an eye on the data. We are expecting a massive drop. Look, this forecast got revised in a way. I mean, it was a higher number the beginning of the week, but it got revised. Now we're expecting a drop to 5K. That is, if you think that this is very close to zero, no, it is very close to zero. Ladies and gentlemen, I'm really curious to see if we are going to get another number coming out in negative territory. If by any chance ADP delivers a figure that is, let's say, higher than the forecast but still lower than the previous, okay, I mean, that is still workable. I don't think that the stock market will like this very much. I think the stock market right now is focused on Kevin Hassett, but I'll talk about that in a bit. What's interesting to me is that if this figure, the 42 number, how much it will get revised. Now that's going to be an interesting moment. If it's going to be significantly revised, let's say to the downside, now again, I think investors and traders will have to balance the whole positivity moment, that we're seeing right now in the market and the stock market. So, long story short, keep your eyes on the number here, ADP. I think this is quite important. Going further, we have the Christine Lagarde speech, an interesting one. Let's see if that's going to move the market. Then we're going to get the U.S. industrial production numbers. So we don't have the forecast for the year, for the year-on-year. Manufacturing production as well coming out, so yes, keep that in mind. S&P Global Composite and Services PMI, so yes, it's basically a PMI week this week. And we have the ISM Services PMI. So basically, ladies and gentlemen, I think that we could get some market movement today. Just the most important is if you are trading, like I said, the equities on indices, or maybe the US dollar, then yes, or something related to the US dollar, then yes, certainly keep that in mind, because again, some movement here could happen. If you are trading USDCAD, for example, also be very careful. EURUSD, also be very careful. Now let's jump. Speaking of all these instruments, actually, you know what? Let's jump into the chart. So, ladies and gentlemen, Nikkei 225. So I talked about this, and I said, look, there is still a chance for a move higher, because if we do rebound from this broken downside line, which is drawn from the high of the 4th of November, then if we do see a correction back down, if it falls and tests the downside line, okay, great. We might see a hold up here, and if we do rebound, great, wonderful. I'll go to the upside, and this is so far what we're getting. So in a way, if you've missed the rebound here, and you really don't want to chase the market because you're thinking, hey, maybe you know what, the 20-day SMA is going to provide resistance here, and we could reverse back down. I totally get you. I'm not really against this. I would actually be more willing to wait for clearance of the 50,322 territory right here, just to be a little bit more on the safe side. Again, this is not the exact level, it's more of the area that we're watching here. So if we do get a clearance of the 50,300, kind of 20, something like that zone here. Basically this little, barrier here. If we do clear it, I'll go to the upside. Shanghai Composite, there we go. Watching this barrier right here, the 3,922. So far, so good. We're holding up nicely here. We're drifting a little bit back down, but I'm not really taking this as a critical moment or something. For me, the feast for the bears could be if we do drop below this 3,816 and this 100-day EMA. If we can get that drop, wonderful. More sellers could join in. If we're looking at the upside scenario right here, then yeah, I think that, like I said, this area right here, the 3,922 is the good area to watch. And also, if we do pop above the 20-day SMA, then great, more buyers could join in. Dow Jones Industrial Average. So Dow Jones Industrial Average is looking quite nice here. We saw some positivity. Let me just double check here. Yesterday you can see here that Dow closed with a small little gain here. Nasdaq was the better performer, and kind of the S&P was, as always, somewhere in the middle. Well, most of the time somewhere in the middle. So we got a nice close here. Okay, that's absolutely fine. Nasdaq, like I said, Nasdaq was the better performer. The S&P 500, there we go. We're still above this broken downside line. I talked about it, and I said that if we do remain above this downside line, then there is a good chance of a further drift north here. If we do fall back down and we fall back below this downside line, below the 6,774 territory, then yep, I will consider a move lower. But again, don't get me wrong, some confirmation breaks here of the 20-day SMA, the 50-day SMA, so these would be needed as well. So so a drop below the 6,774 is not the kind of the final thing which kind of opens the door to all the downside, right? No, there's a lot of ifs still. So just kind of be careful. So yeah, ladies and gentlemen, for now, like I said, I'm cautiously bullish. Looking at Nasdaq as well. This one's trying to climb back up. So I think the 25,700 zone here on the Nasdaq 100 looks quite interesting, quite nice. I'm still going to target that. So I don't want to do anything else, to be honest. And yeah, if we if we clear this 25,700, I'll go a little bit more to the upside. So that's my game plan for now. Certainly everybody's watching like I said, the ADPs today. All the traders are watching that. By the way, looking at the cash index right now, where we're trading at on Nasdaq, for example, we're trading around 25,000 kind of 600 zone. So a little bit above yesterday's close, but still elevated. Now, another thing that everybody's watching carefully is the you remember this picture that I showed you that I took from from Bloomberg. Basically, these are the nominees, and I took a snapshot here on the 20th of November, and basically everybody was speculating, who could be the next Fed chair according to the White House, and everybody was kind of leaning a little bit more towards Christopher Waller, but it seems after kind of what has been happening this week, it seems like that Kevin Hassett could be that next Fed chair governor. Again, it's an interesting move. The market, like I said, we'll see if the market welcomes that, because from what I hear so far, and this is, like I said, still a work in progress. I mean, from what I hear so far, he's more of a dovish candidate, meaning that he's more in favor of more cuts, which basically is, yes, this is something that the White House wants, and we want to see more cuts, which could lead to higher inflation later on, but hey, it's all about spending, right? It's all about spending. Look, what can I say? For now, I don't want to rush into any conclusion here. I want to see, you know, if he's a good person or not. Just like, I mean, not that I'm going to communicate with him or something, no, but just to do my own research to see, you know, how he speaks and everything. But yeah, then I'll have my own. I'll have my own opinion about this. But certainly Jerome Powell kind of grew on us already, right? And he kind of was the person that everybody already understood. He speaks clearly. He's very calm, and it seems like that at least. Okay. Again, we don't know how he is behind the camera, but certainly, on camera, he does present himself as a trustworthy person. Anyway, so we'll see what's going to happen here, and certainly we'll see how the market reacts today. Although the official announcement will be something in January, but we already kind of heard from Mr. President that that he kind of gave a little. It was like a little spoiler alert, yeah, we're gonna see how the market, like I said, how the market reacts to that today. The German index DAX. So we're open in positive territory. I talked about this idea on Monday as well. I said, look, keep your eyes on this little area right here, this highlighted zone. If it holds, we could see a rebound. Boom. Now, if you've missed a rebound, keep your eyes on the 50-day EMA shown as the green line together with the 23,884. If that gets cleared as well, the next target for me is this downside line taken from the highest point of October, and that's what I'm going to aim for initially, and then we'll see. Maybe we'll go higher, maybe we'll hold here and we'll reverse back down. So like I said, let's not rush into conclusion. Very simple approach here on DAX from the technical side. I'm leaning a little bit more towards the upside. My downside scenario, like I said, I need a clearance of this territory. By the way, this territory is roughly between the 23,452 and 530 levels. So yeah, clearance of that is required. The FTSE 100. The FTSE 100 is stuck. It's stuck, and we're waiting for the next little catalyst of some sort, so that this could, give us some sort of a move here. At the moment, we are, like I said, yeah, struggling to, to find like a clear direction here. So either way, still looks somewhat positive, because look, we're still above the above this 20-day SMA here. We're slightly we're fluctuating around the 9,696 territory right here. So look, if we stay somewhere around here and we stay above this hurdle, then yeah, I'm going to continue targeting the upside. Basically, I'm still kind of in favor of this scenario. If we do get a move back below the 20-day SMA, then yes, certainly a little bit of a retracement back down could be possible here, but certainly the upside line could be a little bit in the way, together with the 50-day EMA, which is in line here. But in general, if you ask me, do I believe that there could be some more upside or downside? I will honestly say to you, no, I don't know. Because look, on one hand, we did have a nice, beautiful retracement back up here. We corrected 61.8 on the Fibonacci retracement, which is drawn from the all-time high to the lowest point of November. And we did the 61.8. That's perfect. Just kind of beautiful textbook scenario. We're currently hovering above the 50%, so that kind of, like I said, still gives that possibility of a move higher. However, a clearance of this 61.8 here would be required in order to get a little bit more comfortable with the upside, because there is still a chance of a move lower, but for that I need to see a drop below the 20-day SMA, below that 6,996, and in this case as well, the 50% here on the Fibonacci, this retracement. DXY, finally from all the indices here at DXY, look, my target has been reached. I said to you previously that if we do break this upside line and we fall below, actually just break the upside line, then my next target will be this 99 zone. There we go. Tick, mission accomplished. Team, we're heading home. Well, no, not really, because there's still more fun. We could still see some more fun times here. Because if we do fall below the 99 zone, am I going to lean to the downside? Yes, of course. I'm going to lean further south. So that's what I'm going to do for now. Keep your eyes on the 99 zone, and for the upside, this upside line can go. I don't need it anymore, because now what I'm going to do here is I'm going to consider a possible range. So if this is a possible range, then yeah, if it's a range trader's paradise, so more, range traders could join in here. So keep that in mind. But if we do start pushing somewhere above the midpoint of this range, yep, I will go to the upside. Let's jump into the currency world, ladies and gentlemen. AUDUSD, there we go, pushing higher, ladies and gentlemen. Beautiful move. So far, so good. I'm not really gonna say anything here. I'm still somewhat positive, especially if we climb above this 0.6580 zone. If we do that, amazing. More buyers here could join in. We could then target the 0.6629 and so on and so on. If we're looking for some lower levels, a drop below this upside line, below the 0.6469 is required. And then yes, yeah, potentially more sellers here could join in. All this area right here, look, I don't want to say anything. I'm not really, a big fan of doing anything here. But in a way, if we do see a hold up below the 0.6580, I think that something like, like this could happen here. We could see a drift back down, a correction back down. Of course, then I'll apply my Fibonacci retracement to see, where we can find the good area of support. Maybe the support will come somewhere near these EMAs, the 50 and the 100. It could provide some support here, rebound, push back up, break the barrier, the 0.6580, and happily ever after move higher. Again, that's the ideal scenario. Let's see if something like that will work out. AUDNZD, I love this one. I really do. I'm not gonna lie. I'm very biased towards this pair. I really like how it moves. And right now we're forming another possible falling wedge pattern. Why I'm saying another? Because last time we were here. Look at this beauty. There we go. Look at this. Fantastic, beautiful textbook scenario here. Are we going to get another textbook scenario? Time will tell. Of course. But obviously we need to wait for a confirmation break. So while we remain in such a pattern, inside the pattern, it could still drift lower. But if it starts breaking one of the sides, then yes, certainly we'll consider the next short-term directional move. Okay. So, ladies and gentlemen, actually need a little bit of a sip of tea because yeah, my mouth's getting dry from all the talking. So, now then, jumping into our risk-on, risk-off monitor. Now, AUDJPY is approaching this once again, testing this barrier roughly between the 102.40 and the 102.62-ish zone here. This is a good area of resistance. It has been a good area of resistance back here in November of last year, and also acted as a good area of support and in June, basically marking this 102.62 is the lowest point of June of 2024. So good potential target. We need a clearance of that. Yes, we do. We need a clearance of that. Yes, we do. So let's wait. But we'll remain vigilant. And I think, like I said, this is something to keep in mind. So yeah, if we do clear this area, I will go higher. I cannot really lie here, because also the fact that the market kind of turned a little bit, into risk on. Let's see, maybe today we'll see some more risk on movement. However, if we don't, If we don't see that, if we just see a correction back down, then it's even a better maybe, like maybe this is a it's going to be just fantastic, picture perfect area of resistance. Keep that in mind. There we go, ladies and gentlemen. You keep this chart on your in your head, and yeah, maybe we could find some value here. One more value chart I want to show you, and that's AUDCHF, another potential risk on, risk off monitor, but maybe less than that. But look, this one's against our beloved Swiss franc, which kind of showed us very low inflation numbers today. So look, at the moment, this pair, AUDCHF, is in a beautiful range here. Yes, we had some violations here. That's absolutely fine. These are called false breakout. On a weekly chart, you're probably going to see a little bit of a better situation. Nevertheless, we're still in a somewhat of a range. So this violation happened here, okay, but then we kind of quickly moved back up. And, I would ignore the range after that if we wouldn't just respect the upper side of this previous range and at that moment, right? And now it's, like I said, still valid, so why not to consider some higher levels? Let's jump into NZD USD very quickly. So this one's kind of trying to move back up, so that's fine. NZDJPY, similar story, looking quite positive still. EURUSD, come on. There we go. So we're very close to the upper side of this range. Some of you might say, but hey, Darius, what about maybe it's a double bottom here? I will say, hey, I can consider that. Of course, I think that this is quite. Possible in a way. So either way, if it's a double bottom, if it's a range here, we're testing the upper side of it. So just let's not ignore the fact that we need a confirmation break. If we can get the confirmation break, then that's wonderful. More buyers here could join in. Very simple. Also, we're watching, like I said, we're watching DXY, which is near this area, and if let's say it starts confirming a range of some sort here, then we could see a little bit of strength kicking in into the US dollar, meaning that maybe EURUSD actually could drift back down. So we are at a very critical spot, so just keep that in mind. EUROCHF very quickly. Yeah, it wants to go higher, it seems like that, but it needs confirmation break. Now, EUROJPY, I like this one, I really do. It has been trending to the upside here for some time now, from kind of March time here. The beginning of March, we have been trending to the upside. Look at this massive move here from around 155 all the way to 180. Look, if we measure the performance here from that beginning of March here, somewhere from around here, let's say 156, and all the way where we are right now, 16% better. That's how much the yen devaluated. That's how much the yen devaluated against the European currency. Right. At one point, this will have to turn around. But what are we waiting for? Well, we are waiting for a catalyst. Now, if the stock market reverses, lower, then people will start shifting towards, something like safe havens and everything like that. But if we do get that shift towards kind of risk off, then yes, great. The Japanese yen could strengthen. Also, don't forget about the fact that we're going to see the BOJ coming out on the again, remind myself, 19th. Let me just double check. It's going to be Friday. Inflation Japan. No, Japan. Yeah, Friday. We're going to get the inflation numbers from Japan, and we're going to get the BOJ. So these guys are expected to hike by 25 basis points. If they do that, we could see some strengthening of the Japanese yen. So, ladies and gentlemen, long story short, for now, we're coiling up. We're getting into a bit of a squeeze. And are we ready to pop? Well, wait for it. Okay, do not rush into things, and certainly, just be very careful and have your stop losses in place all the time. GBPUSD, very quickly. Where's that GBPUSD? Where's my GBPUSD? There we go. Seems to be like somewhat positive still, but we need some clearances here. It's struggling with the EMAs. If you're, the levels here, kind of working, kind of not. So yeah, it's like, okay, 1.32 is the barrier. We remained above it, so now we're rebounding. Let's see if we can clear those EMAs. The 200 shown as the white line here, the green one, the 50-day EMA, and the blue one is the 100-day EMA. Let's see if we can clear those and go higher. GBPJPY, a similar story in a way, kind of, but still, holding above this 205.30 zone. If we stay above it, then great, more buyers could join in. USDCAD, looking at the beautiful picture here, we're falling below this area, the support area that I talked about, and in a way, if we do stay below this, then okay, yeah, I'm gonna go further south. And don't remember what do please remember do please remember that today we're getting those PMIs, and from both sides, from the US, from Canada side, so the composite and services PMIs. Also, we're getting some, ISM services PMIs, S&P. We're getting the S&P global services in composite. Now we're also getting the ISM services. So this pair could move, and depending on the outcome, of course, of the data. So keep that in mind. USDJPY, this one's drifting a little bit lower. Now the yen here is strengthening against the US dollar, but maybe it was a little brief drop here. Maybe we need to get rid of this upside line here. But so far so good in a way, I would say. Let me just get rid of some of the lines. So far we're sitting above the 20-day SMA within my Bollinger Band, and as long as we stay above it, then there is a chance of a push back up. If we fall below the 20-day SMA, I'm going to lean a little bit more towards the downside. USDCHF, one of my favorite pairs, and it's still hugging that, testing that downside line, which it broke a few times actually, but still respects it somehow. It has broken it, disrespected it a few times, but still, doesn't want to go away from it. So I'm keeping an eye on this. I'm seeing this. I'm potentially considering this one maybe as a little trampoline. But again, if DXY is gonna push lower, then yeah, we could see this one dropping lower. But again, if DXY will rebound from that lower side of the potential range, then yes, great. Maybe USDCHF could actually make a move higher as well. Let's jump into the commodities sector, ladies and gentlemen. Gold. Okay, look. Okay, everything is fine. We had a little retracement yesterday, which is quite normal after hitting a key area of resistance, which is around this 4,245. If we do kind of maybe push through this barrier, then yes, great, more buyers could join in. But I think at the moment what's happening is this: we're getting a little bit of a retracement here. Let's see if we can stay above this downside line, and 4,145 is the one that we will be carefully watching. If we stay above this area, then great, I will consider a little bit of a move back up. If we do clear the 4,245, I will consider a move back up. For me to consider the downside scenario, well, at least a drop to start off, at least to kick off, at least this examining the downside, I would need to see a drop below the 4,145 level right here, and then we could just kind of take it from there. Silver is still the big topic, the big hot topic, the big hot metal that everybody's kind of crazy about right now because of this. Look at this. I mean, I talked about silver. I have drawn some, trend lines, and I talked about this 54.5 zone, which we broke, and I said, look, if we're gonna go higher, if we're gonna break this one, we could go higher. My next targets are the 56, 58. Boom, fantastic. Reached all that, and we reached an all-time high, which is around the 58.95 zone ish. Today we reached that. So we're flirting, really flirting with that idea of hitting the $60 mark. And to be honest, I'm still gonna consider that idea, crazy idea maybe for to some, but certainly yes, it's a nice, beautiful round number. The market does like symbolism a lot, and yeah, it's I think it could be done, But do I overall like this picture, like and like the further advances to the upside? Well, no, not really. I'm not gonna lie. I mean, look at this. This is this like okay, so probably now is the best time to buy silver, right? I mean, come on, like really, this is just ridiculous. Yes, I do understand demand for it. I do understand that there is, people are like using it because it's a very good it's a very good conductor, and is used everywhere. Like especially with the whole AI boom, the whole data centers and everything. But it will stop. It will stop eventually, and I think that once the stock market reverses lower, this is where silver could drift nicely to the downside. So I said it before, and I'll say it again, and maybe this is a very unpopular thought, that if the stock market reverses lower, I think the commodities, the precious metals will reverse lower as well. Why? Because yes, they are seen as safe havens, but in the times when everything is in the times when everything is bad, for governments, because governments are heavily involved in this whole, precious metal buying. But when the times are bad, what are you going to do? You're going to, start opening, you're switching on the printing machine, the money printing machine. Well, you don't really want to do that too much, right? You will probably sell something, right? And well, if you have a lot of reserves, silver and gold, you will still buy it again at a later stage. But the thing is, why not to sell it at the peak? I really don't see the issue here, because when you can use the same money then maybe to buy it, when it's gonna correct lower, why not? Look at this. I mean, these are the historic moments. I mean, look at these parabolic moves. 1980, 2011, there we go, and now we're 2025. We will go back down, but certainly at the moment we're being, like I said, very, very careful, very cautious. We still potentially have some more room to the upside if we are considering the $60 mark as the next potential target. So yeah, I would say this way that there is some room still for the upside, but at the same time, should you be chasing this? No, of course not. But again, it's up to you, ladies and gentlemen. Honestly, it's always up to you. You know yourselves better what you want to do. But yeah, for now, everything's pointing still a little bit more to the upside. However, maybe we're getting a little bit of a pause moment here. Let's see. Platinum, very quickly on platinum, we had a great run, or rallied to this highest point of 2025, closer to that, and retraced back down. There we go. This is an interesting moment here. After I said that if we do break the downside line, I'm going to go higher. There we go. Mission accomplished. But now we're stuck. We're stuck, and I want to see if we can climb back above the 1,662, and then I'll consider a move to the upside. Palladium. Palladium is, I really do like palladium. I'm not going to lie here. I really do like this metal, and I think that it has value, it has potential, but hey, if we will see a moment to the downside on gold and silver, I think it can drag palladium lower as well. But if, let's say, I'm expecting if gold and silver are going to start selling off rapidly, strongly, I don't really somehow expect palladium to sell off that much. I think that, and if it is the case, if it doesn't sell off that much, then there is like I said, there is an issue. Like, I think that maybe the palladium still is the one that, which could store value and could, could be seen as a next big metal. Copper, I like this one to the upside, broke the range, hey, what can I say? We're at all-time highs. I am gonna go for that 1,100 in a way, and then we'll just kind of take it from there. Look, in a way, look. Of course, we could have a more logical approach here. Let me just show you what I mean. So if we do jump into a monthly chart right here, and let's say we have this, big reversal here to the upside in 2020. We rallied, then we peaked here, we corrected back down, and then from here we started rallying again. So if I do apply my beloved Fibonacci extension, oh no, not retracement, extension. So there we go, boom, boom, and another boom. So we kind of surpassed the 78.6 right now. So the next target is the 100%. And that's roughly, actually, that was close. 1,100, I was saying, 1,151-ish zone. Now that's the next target for copper for me, at least for me. I'm going to see if this is going to happen. Hey, let's see if it's going to happen. Let's jump into sugar, my beloved sugar. Going into the daily chart, there we go. Let me just align it. Okay, I said it before, I'm going to stick to my game plan. I need to see a pop above the 15.25 in order to go higher. For the downside, I need to see a drop below the 14.74 in order to consider a move to the downside. WTI oil, we are stuck here. We are stuck in this little area. We're below this downside line. We're above the upside line. So if we're looking for some higher levels, then certainly wait for clearance of this downside line. And a push above the 50-day EMA shown as the green line here could attract a few more buyers into the game. If we do get that move, great. More, like I said, more buyers here could jump in. So keep that in mind. At the moment, I think we're going to be stuck here for a while. So let's see how this is going to play out. Brent oil, we're still in the falling channel. Which could be seen as a part of a bullish flag here, but still we're in the falling channel, so we need to kind of wait for clearance of one of the sides here. But look, for now, if we do fall back below the $62 mark somewhere here, then I think that there is a better chance of a kind of a move lower in a way here. So yes, the 62, maybe 14, 15 zone here is something that I'm going to be watching. If we fall below this, I'm going to consider a little bit of a move to the downside. Natural gas, we're hitting that 5, right? No, 4.98. Okay, we're very close. We came very close yesterday, but you know what? I will take that. I will take that as a success. I said to you, I'm going to aim at, like in the beginning of, in November, I was saying, like, look, I'm going to target that 5. There we go. Boom, mission accomplished. This is great. This is wonderful. This is, what's next? What's next? Well, for now, I think that what I'm going to do here is I'm going to keep an eye on that 5. If we do clear it, I'm going to go further north. Yep, we do have some room, as you can see yourselves, but certainly, let's see, if we can get a little bit of a reversal in the stock market, which I think that could, drag this commodity back down as well. And also, if we somehow get like a warmer winter a little bit, now that's where natural gas prices could drift a little bit lower. Bitcoin. Now, looking at Bitcoin, beautiful movement here. Look at this. If you remember, this happened on Monday, big decline. And then I said, look, if we're going to stay somewhere above this area, this is what I talked about on Monday, Markets Talk. If we're going to stay somewhere around here, we can see a rebound back up. Are we getting that rebound? Yes, we are. And look at this beautiful thing. We are pushing higher. We're now testing the steeper downside line drawn from the high of the 28th of October. And if we can clear that downside line, again, great, more buyers could join in. If we do break this other steeper downside line, or slightly less steeper downside line drawn from the high of the 6th of October, I'll go further north. So basically, there's a lot of ifs, but let's keep an eye on this 93 zone here, 93,000. If we do push and stay above it and we break the steeper downside line, I'm going to lean a little bit more towards the upside. Bitcoin Cash, boom. I talked about this last week, at the end of last week, and I talked about this on Monday. I said, we are in a possible bullish flag. because we're seeing this little falling wedge pattern, which, like I said, is part of, or could be part of, a bullish flag here overall. And everything is kind of pointing more towards the upside. There we go. I talked about this and I warned you about this, and there we go. We had a beautiful movement here. 550, 575. This is what I'm watching. So great, amazing stuff. Let's see what's going to happen next, and for now I'm going to continue targeting the upside, especially if we're going to stay above the 575 territory. My next target then is the 615 area-ish, and then we'll take it from there. Ripple pushing back up as well. Cryptos are, kind of most of the time working hand in hand. Yeah, we are approaching this downside line taken from the high of the 5th of October. And if we were going to stay below it, then yeah, okay, another downside move could happen. But for now, I'm leaning towards the upside. Let's see what's going to happen here. And yeah, we'll go from there. We'll wait for a break of this downside line if we want to consider a move higher. If we can get that break, I'll go further north. Ethereum is beautiful, and it's testing the 3058 territory. I talked about it before. This was my barrier to the downside, worked like a charm, and now it's providing strong resistance. Now I really want to see what's going to happen here. Are we going to actually pop above this hurdle? If we do, my next target is this downside line taken from the high of the 7th of October. Litecoin, beautiful rebound. Look at this. I talked about the 76.40. Great hold up around here, and basically that was the lowest point of June of this year. Great hold up here, beautiful rebound. So, but am I getting very comfortable right now with the upside? No, not yet, because I would prefer to wait for a push above the 87.83 territory right here, and then we could just take it from there. Dogecoin is climbing back above the 0.1430. If we do stay above this area, then great. I'm going to consider a larger correction back up. There we go. Everything is working very well. Polkadot is also trying to climb higher, but now it's having this moment of this 2.35 zone. I talked on Monday about this. I said, look, if we do climb back above the 2.35, it kind of increases the chances of a possible move, a possible larger correction back up. So let's see if that's going to happen. And finally, Tron. Now Tron is, without any strong movement, it's kind of breaking the downside line. So maybe we should actually ignore this break, and maybe we should kind of focus on some support and resistance levels instead. So for me, if we do start, let's say, moving back below the 0.2775, I will consider a move lower. For the upside, I need to see a push above the 20-day SMA here. If I can get that move here above this 20-day SMA within the Bollinger Band, and also a push above the 0.2835, I'll go to the upside. Ladies and gentlemen, that is a wrap for this week. Not only for today, for this week as well. Because like I said, I am going to be away on Friday. But look, I hope you enjoyed this session. Join me next week on Monday. We're going to have a full normal week, Monday, Wednesday, and Friday for Markets Talk. Certainly don't forget to subscribe to our YouTube channel and our Instagram as well, and our TikTok, and all our social networks. Yeah, especially for YouTube, because I will be preparing some separate little video analysis, which don't miss out. Anyway, ladies and gentlemen, thank you very much, and I shall see you on Monday. But promise me, you will stay safe. You'll have your stop losses in place. You'll risk only what you can afford to lose. You're not going to overtrade, and everything will be fine. I'll see you on Monday. Bye-bye.